Hello, families of Deanwood. It's me, Melvin Yates, your neighborhood real estate broker with EXIT Flagship Realty. Now today, during this Deanwood real estate market memo, I'll be sharing with you the 5 things you need to know about the real estate market right here in Deanwood. Plus, I'll give you some national data that's helping drive our local market. Please note that my office has over 160 dynamic agents serving clients like you in DC, Maryland, and Virginia, and we would love to help you put a real estate game plan together. Now, over the last 12 months, the average sales price in all of Deanwood has increased by 2.2% to $408,000. During the month of October, the average list price to sold price ratio was roughly 97.6%. This means that sellers got about 2.5% below what they were asking. But when we look at the third quarter numbers for this year in Deanwood, sellers received close to 1.5% below, which means that signs may be warming up a little bit. Now, the average days on market for a home sold in Deanwood during October was 21 days, which is 6 days ahead of the DC average of 27. Now, during the month of October, we had 31 new homes come to market. That means 31 home sellers listed their home for sale, but we still have 10 weeks of inventory, which means that we can't quite keep up with the demand. So sellers in Deanwood, this is a great time to consider taking advantage. As far as home sellers who accepted an offer in the month of October, otherwise known as pending, there were 28 homes that went pending during the month. That represents 90% of the 31 new home listings for sale that month, which further demonstrates my point about the demand in Deanwood being higher than normal. However, for my buyers out there, as you can see, there are still homes for sale. 100% of the homes will never sell, so there's still plenty of opportunity for you. Now, there were 21 homes that actually did sell during the month in all of Deanwood. That's 91% more than last month and up 10.5% over last year this time. And lastly, the year-to-date sold homes in Deanwood, January through October of this year, were 206 homes. This is an 11% decrease over the year-to-date for the same period last year. Even though the trajectory is higher, more homes are selling, but it's still not enough to keep up with the buyers who want to buy in Deanwood. Now, before I jump into the national data, which will show you exactly how our local neighborhood is being affected, feel free to schedule a confidential strategy session with me or my team using the link. Text, call, or email me. Now onto the national data. As we're seeing all this increase in sales and appreciation, let's take a quick peek at the 2022 housing projection from a national level. And it all really starts with a conversation on mortgage rates. So let's dive right in and look at this quote from Doug Duncan at Fannie Mae. It says, right now, we are forecast mortgage rates to average 3.3% in 2022, which though slightly higher than 2020 and 2021, by historical standards remains extremely low and supportive of mortgage demand and affordability. So what does all that even mean? Well, just like most of the other experts are projecting, we're seeing a projection of increased mortgage rates. We're seeing that even over the past few weeks, as mortgage rates have on average ticked up above 3%. So as mortgage rates rise, it will cost more to purchase a home, and that's directly tied to home affordability. Mortgage rates, prices, and wages are the 3 levers for affordability. So if the mortgage rates are projected to rise, it will cost more. But what I love about this quote is the piece about the historical standards. If mortgage rates are ticking up a little bit, though it will cost more, they are still projected to remain historically low, and that supports affordability. So that's not only good news for sellers, it's great news for buyers. However, if you're a buyer in this market, you need to understand that you should purchase before mortgage rates rise even higher. Now let's look at the mortgage rate data. This data from Freddie Mac, and it shows average mortgage rates going all the way back to 2018. And what you see here is that mortgage rates were roughly just under 5% in 2018. And then they've dropped significantly since then, obviously. And we've basically hit the all-time low very end of last year, early this year, and then they've started to tick up again. So, what people want to know is, where are they headed now? Similarly, as we saw in the quote before, you can see Freddie Mac is saying mortgage rates are projected to rise to roughly 3.6% by this time next year. So as mortgage rates rise and get higher, it becomes more expensive to purchase a home. And that's what we want to help you as a homeowner understand. If you're thinking of waiting 1, 2, or 3 years, you may consider buying now, because buying before mortgage rates rise is mission critical to an affordability standpoint. Now, mortgage rates aren't the only thing that's going to rise next year. home prices are forecasted to appreciate as well. So what we're looking for here is home price forecasting for 2022. And as we look at the 6 industry experts that we follow, they're averaging out to about 5.1% appreciation next year. Now, what does that mean? Well, what we've seen and we've talked about over the past year, home prices have appreciated at record-breaking levels, 10, 20, even 30+% appreciation in some parts of the country. So next year, the forecast is showing continued appreciation, but at a slower or more moderate rate. Now, I've used the term deceleration, and as a buyer, you should know that the home prices are expected to continue rising, but at that decelerated rate, which means slower and more moderate. So we are definitely not projecting a decline in prices, but a slower rate of appreciation. That means that it's going to get more expensive to purchase a home, and we want buyers to be able to purchase before home prices rise. But why are they projected to continue appreciating? That's because inventory is still a big challenge. It's still a major question. As we look at the supply and demand conversation again, supply is low and demand is high. And that's going to naturally make prices rise. And this inventory situation won't be solved overnight. We'll still have an inventory challenge next year, but likely softening because builders are coming back to the market, building more homes, and we anticipate more sellers to feel less pressure coming out of the pandemic and may be interested at that time in selling their home if they've previously held off. Now, what does this mean for buyers? Of course, buy before prices and mortgage rates rise to maintain that affordability. What does it mean for sellers? We've talked about record-breaking equity over the past year, and equity will continue rising as home prices rise. So what we want to make sure that homeowners know is that if you're thinking about making that move 2 or 3 years down the road, maybe even sometime next year, doing it before prices rise will help you leverage that equity, make that move up or downsize while you still can lock in that low rate and take advantage of the home price appreciation. I think as we go into next year with prices rising, interest rates rising, it's going to cost more. We need to start talking about the non-financial benefits of homeownership. I want to talk about that for just a couple of minutes and give you the latest information on what's happening in that area. Don Layton from Harvard University says, homeownership is regarded as causing an improvement in the quality of life of a typical family. It is the most common method for such a family to build wealth that can be used for retirement, other needs, including helping the next generation. It goes on to say such wealth creation therefore provides a major social as well as economic benefit. We've been talking a lot over the last year about the economic benefits with rising prices, equity rising across the country, but let's start to talk about the non-financial benefits and what that's looked like coming, over the last year and a half across the country. Unison just did a report on the state of the American homeowner. The 2021 State of the American Homeowner said this: 64% of American homeowners say living through a pandemic has made their home more important than ever to them. 83% of homeowners say their home has kept them safe during the pandemic. No doubt, home has taken on a new meaning for folks. Now, 91% of homeowners say they feel secure or stable or successful owning a home. So home sellers, you have an incredible market with prices that have never been higher and motivated, serious buyers out there. However, there's one thing to consider. People are starting to realize that they can choose from more options now than ever before, and that's just a normalizing of the market, which sounds good to me. And if you're a home seller, you may be thinking it's time to be a buyer yourself and take advantage of the opportunity to move up, move down, or maybe move away. Home buyers will continue to see more appreciation, and with more options come more opportunity. Interest rates are at historically low levels, and history would tell us that this time next year, real estate will not only be more expensive, but so will mortgage rates. So if you've been thinking about buying or selling real estate, we would love to sit down with you, create a real estate game plan to navigate the challenges and opportunities that we're finding in today's real estate climate. You can schedule a confidential meeting with my team or myself using the link. You can also text, call, or email me directly. I'll see you again soon.